Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Actions Speak Louder. You know the saying, actions speak louder than words, and watch what people do, not what people say. So I find that really interesting. We've got a lot of folks that are very bearish, a lot of people looking for a crash, but we're just not seeing the fear in the market. We're just not seeing the put buying, just not seeing the fear. We're going to talk about the fear index, the VIX, and those are just a couple of examples of why I think the intermediate bottom, at least an intermediate bottom, is not even here in the bear market, much less the end of the bear market. So let's talk about where we're at and what's going on here. This last week, we had a big bounce in all three of the major indices. It was heavily influenced by what happened on Friday. They were all up around 3% or so, plus or minus a little bit. Heavily influenced by, I think it was the Michigan consumer sentiment came out there. All of a sudden, they noticed that consumers were anticipating maybe a little bit less inflation out to the future. So all of a sudden, everybody's like, oh yeah, everything's going to be fine at the end of, out into 2023. And, it reminds me of what everybody was talking about, how peak inflation, had occurred back in May. And, and then of course that got dashed against the rocks, a couple of weeks ago. All right. So what happened this last week? The Dow was up 1612, the S&P 500 up 237, and the NASDAQ Composite up 809. So, big moves in here, but very similar type moves to what's happened a couple of times here just since January. I mean, you just look back here, the week of May 22nd, and then go back over here into March, mid-March. We had one really strong week, and then a little bit of continuation for a couple of weeks. So we'll see what happens this week. Let's take a look at the side-by-side of the Dow and the Dow Transports. By the way, I am going to drill into the Dow Industrials this week. But the Dow Industrials and the Dow Transports are in sync to the downside. And as I've talked about in the past, I am expecting a lot more on the Dow Transports at a minimum based on this head and shoulders pattern. I think we're going to be down here slightly below 11,000. We'll see if we get it. And that's just with this move coming off of this pattern that we're seeing right here. Let's go back to the home screen and we're going to look at the daily and weekly on the Dow. So here's that 823-point move on Friday. Again, now, we're looking at this, how we've jumped above that blue line, which is the 10-day exponential moving average in here. And we've done that again before. Sometimes you do it, you get a couple of days follow through. Sometimes you do it and you get zero follow through. So what are we about to get now? We're going to look at, and here's March. I think a lot of folks are, looking at this going, are we getting this type of mid-May, mid-March type move? Or are we just getting, 1-2 day type of, reaction? Now, actually, this is really already put in a 4-day type rally in here, but this is the first day closing above that 10-day moving average. Okay, so that's what I'm focused on. Kind of like right here. I mean, here was a 3-day rally. Here was a 3-day rally, and 1 day closing above the 10-day moving average. So we'll see what we get. Let's take a look at the looking down my notes to make sure I'm not missing something. I want to look at the Elliott Wave picture. So here's what we've got. Here's the high back in January 5th, 4th and 5th. And then here's the wave count we've got. Wave 1 down, wave 2 on a pullback. And then, we are in a wave 3 to the downside. And within that third wave, we are looking for a 5-wave impulsive wave structure. And I just don't think we've got it yet. So we're in the third of a third, which is typically one of the strongest periods in an Elliott Wave impulse pattern, or even motive pattern. So let's just take a look at, when we drill down to the 130-minute chart, what are we looking at? Okay, so coming off that minute wave 2 high here on June 2nd, here's what we've got. Now, the reason that I'm labeling this first wave down ending right here on June 14th is because, yeah, we got a 3-wave move, which could have been a zigzag, could have been just a short little wave 2. That was very abbreviated, by the way, to call that a wave 2. But the main thing is I'm only seeing a little 3-wave move down here. And that's not impulsive. I mean, that's not a complete motive wave. You need a 5-wave move, and I'm just not seeing it. It doesn't matter whether you go down to the 65-minute chart, it's my hourly view. This is still not a 5-wave move, in my opinion. Okay, so I'm thinking we got a 3, and now I'm looking for 5 waves up in here to finish off the C wave of what I think is a flat. And so now, yeah, it's getting a little extended, but sometimes these C waves can get very extended. And I'm talking about as a comparison to the length of wave A. Okay, so where are we in terms of a wave 2 versus wave 1? We're very close. We're above 38.2% retracement. We're very close to 50. This puts us back up right 50% retracement at 31,695, let's call it, is very close to 31,717, which is this wave 4 within the 3rd wave over here. Okay, so let me go back to the 65-minute. Here's what I'm talking about. Within this 3rd wave, this is the little 4th wave corrective pattern. We had 2 little corrective patterns in here, gap down, all part of the 3rd wave, and here's the 4th wave high at 31,717. So that's why I'm looking at that as 2 possible benchmarks. We close the gap, we close the first gap, okay, with the price action that happened on Friday. We closed the first gap, but above this level, we still got another gap up here. Could we push that far? It's possible. I mean, anything is possible. Again, a wave 2 can retrace, quite a bit of wave 1, and it can be a valid wave 2 all the way back up to, as long as it doesn't go above the beginning of the wave 1. But I don't think we're going to get up into here. Do we get up and get past a 61.8% retracement? Who knows? Right now, we're extended. I think we're in a 5th of the C wave. When I look at the C wave in here, it looks to me, this got a little messy. This looks to me like we're carving out a 5th wave in here. So we'll see what we get. And that's the picture. That's what we've got right now on the Dow. And so I am looking for this wave 2 to complete probably this week. Now, what else is going on this week? We have 4 more days of trading in the month of June. And so we're coming up on the fact that it's going to be month end, quarter end. Everybody's talking about the fact that we could have quarter end window dressing, etc. We'll see what happens. I mean, you never know. You never know. And it's possible that, we continue to push up a little bit higher. I just got done talking about that. But when this finishes, the next move down is going to be the 3rd wave within the 3rd wave within a 3rd wave down. All right, so that is the picture on the Dow Industrials. Well, let's take a look at the VIX. Here's an article that got my attention today. Fear has gone missing in Wall Street's slow motion bear market. This was on Bloomberg, okay? I thought I had this was Bloomberg today. I thought I had the Bloomberg in here somewhere, so I apologize for that. But yeah, this is an article out there on Bloomberg. If you go out, you can find it. Pretty interesting. But here's one of the charts that they used in that article. And clearly, here's the source, Bloomberg. Sleepy VIX. They're talking about the level. They're talking about the fact that it hasn't seen panic levels that exhibit panic like other bear markets. And so pretty interesting, and it's true. I mean, we really haven't seen that. The other thing I was talking about is the put to call ratio on the Chicago Board of Options Exchange, equity put to call. look at what happened on Friday. Yeah, you would expect a low level. This is 50 puts for every 100 calls. That's what that means. So you would expect a low level put buying when you see the markets, all the indices up or 3% or more, okay? And it brings that 10-day down to 0.71. Well, the 10-day got to 4 days in a row at 0.76. Back in May, 3 days in a row at 0.76, but that's it. That's all we've seen in terms of any kind of move in the 10-day. I mean, you scroll back up here into January, February. I mean, there's nothing. There's just no any kind of extreme on the downside. We've seen several extreme optimism levels in terms of getting carried away to the with call buying, but we're just not seeing it here. So what are we looking for? I think I've shown this before, but I'll show it again. Here's an example of minor wave 1 in March of 2008. The first 5-wave move down when it bottomed, okay, before we had a wave 2 counter trend move. We're just not close to seeing anything like that right now. So we'll see what we get. And I tell you what, we continue to come down and we complete this third wave, we may start to get some of that type of activity. Okay, I want to revisit what we talked about in May, a couple of the ETFs. Remember in May with consumer-related, the retail XRT and consumer discretionary XLY, I looked at those back in mid-May, and I want to pull that up. Okay, here's XRT. And so it's interesting that we haven't taken out that May low that occurred. This is the week of May 22nd. Okay, and the low 59.26. I've got this dashed line in here at 51.52 because I think it's a potential major support area in here, but we haven't even come down to attack that level yet. But we're clearly in a pretty solid downtrend right now. Yeah, we're bouncing around down here in oversold territory. A little bit of divergence showing up with the move that came down the week before last. So we'll see whether this is going to keep trending down or not. I mean, remember I talked about how Walmart and Target had the worst one-day moves. Walmart had the worst one-day moves ever, I think it was, and Target was the worst since 1987. Let's take a look at the consumer discretionary. Let me go back up here to my watch list and go to right here, XLY. Okay. So in this weekly view, and by the way, that XRT was a weekly view. In this weekly view, we've come down. I had a support area identified in here, 139 to 141 3/4. And we came down into that area in mid-May. Then we bounced up. And then here the week before last, we came closed below that. And I thought, wow, we're going to get a breakdown. Well, it just didn't quite happen. But the interesting thing, when I started looking at this low, 133.04, that's almost exactly the high right before the COVID crash right here. This is the week of February 16th, 2020. The high in here, it's not giving it to me. I'm seeing it in another window, 132.73. And then the high right here, 133.30. So if you take the midpoint between these two highs, it's 133. And that's exactly where we got to in here on the low. It'll be interesting to see if this holds. Yeah, we got a little bit of divergence. We'll see if it matters. On the DI minus, it didn't quite, it didn't quite show up as a pure divergence. This reading was a little bit higher, so we'll see what happens in here. But that's the picture with the retail, XRT, XLY, kind of revisiting what we discussed in May. Still in a pretty solid downtrend with both of these. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.